start. Good afternoon and welcome to this session. I think we have a very interesting topic here, virtual currency in a global context. Virtual currency, when we say this word, is like we are going back to, going back in time to the years before Bitcoin was born. Maybe it's because we have so many names right now. Digital currency, cryptocurrency, stable coins, and all this. And maybe we should learn from Facebook, just be vague, all right? What's more interesting is the composition of our speakers today. On my left is Mr. Markus Ferber. He's from the European Parliament. So I will look him as a regulator, supervisor, broader government angle. And in the middle is Lubin. He's a major market player, and he's one of the founders of Ethereum, and now the boss of ConsenSys, one of the biggest blockchain technology companies in the world. And he is, of course, American. And
Canadian.
Sorry?
Canadian.
Oh, no, sorry, Canadian. Yeah.
Big difference.
Right. Yeah. No, I want you three to represent different continents, but yeah. On the other side is Professor Huang. Professor Huang studies digital currency because one of his roles is director of the Institute of Digital Finance at Peking University, one of China's top schools. But he also worked for 3 years from 2015 to 18 as a member of the Monetary Policy Committee at the People's Bank of China. So he does both policy and research. And he's not sitting in the middle, but he comes from the Middle Kingdom. And I believe I represent the only Chinese media in this conference. So no direct competition from my peers, that's good. And I will just pretend I understand everything they say, but I will stick to my simple questions regardless. So the first simple question is to each one of you. How do you define virtual currency, your views on them, and also maybe your opinions on the 500-pound gorilla in the room, the Libra? Start with you, please.
Thank you very much. It's not up to me to define what could be or what is a token, a cryptocurrency, a virtual currency, or a stable coin. I think it's very easy to understand. Whatever you do in Europe, you have to fit to the rules. So everyone is free to do everything, and then we have to decide what is behind the curtain of these various names. I think what we see for the moment are mostly no currencies in the classical sense, but financial instruments, and therefore minimum requirements for financial instruments should apply, which is not so much. You should know who is behind that. The convergency should be safeguarded. Sometimes it's very easy to bring real cash to a cryptocurrency, but it's a huge problem to bring a cryptocurrency back to real cash. I think that should be safeguarded as well. And at the end, it should be clear what is the minimum requirements for this financial instrument. As an investor, I should know, as for any financial paper as well. If we speak about the elephant in the room, which is Libra, we come in a more complex area because therefore minimum requirements have to be fulfilled as well. But a currency, and Libra should be closer to a real currency than all these cryptocurrencies, which I said are more financial instruments. You have to fulfill a lot of things. And as I have spoken in the preparation for today last week with a representative from Libra, they have learned the lesson that it's not so easy to create something like Libra. The last message I got, there will be a euro Libra, there will be a pound Libra, there will be a dollar Libra, there will be a yen Libra, and whatever Libra. But then I don't understand what is the benefit out of that. And that's the question I have in mind. So number one is, of course, a lot of cryptocurrencies, to be very clear, are misused for those who want to make business in the dark. That's not what legislators want. That's why we have huge legislation, for example, anti-money laundering legislation. which has to be fulfilled. You have to comply with. That's very difficult. The KYC issue, the know your customer. So not in the sense of Alibaba.
All right.
They know the customer quite well. They told me, wow, Mr. Ferber, we have the lowest rate of non-performing loans because we know our customers. That's not the European approach. So know your customer, but that is a Facebook problem as well. They know the customers as well. Very, very good, because they try to give me the personalized advertisements. So that has to be safeguarded. To know your customer is identifying yourself when you open an account. So it's more easy to open a Facebook account than a bank account. That's one of the issues which have to be addressed. And most of these currencies are invented to reduce transaction costs. And I see inside the Eurozone no need for that, as we have done a lot of legislation to improve that. On the cross-border or cross-currency, the cross-border is not Germany to Austria, but euro to dollar or euro to yen or other currencies. Of course, you have costs, which Libra will not fulfill if they do a Libra to each currency. And then that's up to them to decide. And then we have regions where we have underbanked regions, where no financial services are delivered. I think there's a chance, of course. But if you come back, so looking to one continent which is not represented here, it's not Australia, and I think it's easy to understand which I mean. If you start again that each currency has its own Libra, you will not create a benefit for Africa, which is the mostly underbanked continent in the world. So I don't see the benefits for the moment, but if they are able to solve all these problems, they are welcomed.
Okay. One follow-up, a small question on you. So when you talk about cross-border transactions, is it a technical problem or bureaucratic problem?
Both, and it's a cash cow.
Okay.
Yeah, because no one understands how it is working, so you can raise a lot of money out of that. We had it inside the Eurozone as well. We solved the technical problems, and then we said as legislators, as the technical problems are solved, you can't say the costs are so high, and we really made a price regulation, like we did on the roaming as well, that is better known than the price regulation we did on banking transfers. But now the market has delivered. There's no arbitrage possibilities anymore as the costs are so low. Technically, cross-currency, you have more problems, but of course, as no one understands it, as a layman, there's a huge chance to earn money out of that.
So next we move to Professor Huang.
Well, I probably will start with just a very broad concept of digital currency. And within that concept, I'll divide them into, for instance, the cryptocurrencies, which is normally unregulated and issued by some private entities. Stable currency, just discussed something like the ones pushed out by Facebook, JP Morgan, and a number of others doing it. And then the third category is the central bank digital currency. So if I understand correctly, your definition of virtual currency is probably closer to the cryptocurrency I mentioned, issued by the private sector. In terms of Libra, I mean, I think in general, I think this is a very new thing for us all to look very closely at it. In fact, when the Facebook published its white paper on Libra on the 18th of June, we were having a dialogue at IMF about the digital finance in China. So everybody got excited. A lot of them got quite nervous. One of the reasons was because if it really is implemented, it could become immediately an international payment system and possibly even an international currency. So I do think the real implication, if it materializes, could really be revolutionary. But I also see the potential barriers for it is very high. I think finance, like any other financial activities, it needs to be regulated one way or the other, especially for international transactions. So for that reason, I feel that in the near term, it might be very difficult for Libra to actually become a currency in the real world. But my last point is I think Libra might not succeed. I mean, we don't know. But we have entered a phase of digital currency. I think something else might actually work sometime down the road.
Okay, yeah. So both of them said regulation is needed and we need to get the bad things out of these currencies and keep the good things. You are the real market player here. That's your turn now.
Oh, thank you. So one useful way to think about virtual currencies is to divide them into two very broad categories. One is the utility token category, and the other is the price stable or payment token category. On the utility token side, we have lots of different tokens. Sometimes they're called cryptocurrencies. Bitcoin, Ether are two very prominent examples. Those two utility tokens were designed as protocol tokens. They're designed first to incentivize people to lend their resources into a system to validate transactions and secure the networks, and you get utility from that. On the Ethereum platform, you also are able to use this token to pay for running programs on the system. Neither of these tokens were designed to be price-stable tokens. They weren't necessarily designed to be used as payment instruments, although some people use them in some cases for that. Price-stable tokens generally track some sort of asset. So they're either tracking a US dollar, they might be tracking gold, they might be tracking baskets of currencies or commodities. There's some more exotic elements that these are tracking. Where you get trust from on the utility token side is decentralization. So massive decentralization in the case of those two networks, Ethereum and Bitcoin, gives you non-centralized trust. Where you get trust from in price-stable currencies is some decentralization potentially, but some other mechanisms. So there are some price-stable currencies that are algorithmic, that are over-collateralized, by Ether, for instance, on the Ethereum platform in the form of Maker DAI. And even that quite decentralized system has some elements of centralization because you still need a price feed, you need oracles. For other instruments like Tether, USDC, there are assets in a bank, and so there's a decent amount of decentralization, but much more centralized. For central bank digital currencies, you have trust imbued in the system by the institution, by regulation. In my opinion, having choice for the consumer is the thing that we should be striving for. So projects like Libra, in their structure, are reasonable. I would like to see many projects like Libra structured differently with different characteristics. In many nations, this is all about financial inclusion. It's all about people in different nations being able to be part of the global financial system. Many companies around the world would be happy to sell and ship anything to anybody in the world. Often the problem is payment, the difficulty in making that cross-border payment. And so I would like to see many of these systems being brought forth and offered as options. I'm a little bit concerned about the Libra project, as others on this panel might also be, simply because the Libra project is the Facebook project. We know the people who are working on that project. It's 99% Facebook people. And the Facebook nation has 2.3, 2.4 billion citizens, and it probably shouldn't be in a position where it can set monetary policy for small and medium-sized nations. So I agree with you that I think it's going to be very difficult for Libra to launch. I actually thought that they would launch before Mark's testimony in front of U.S. Congress, when he indicated that they wouldn't launch unless they had U.S. regulatory approval. I think many people breathed a sigh of relief. because that's going to be difficult to get. It's going to be difficult to get in the EU. I figured they would start in some small nations and bide their time and gradually diffuse throughout the world. So bottom line is nothing really wrong with the structure of Libra, but having Facebook, who have lost the trust of many people and have exploited personal information and people's attention, having that organization, despite their protestations, marry your financial history going forward, all of your transactions with what they've mined in databases, with what they get from the devices that you carry, is going to be something that's not good for humanity, I believe.
Yeah, okay. So enough to talk about others and other products. Now we talk about what you are doing of yourselves. You means your company, your country, your continent. And this round, you are the first.
So ConsenSys does many different things. We work at the protocol level of the Ethereum platform. We focus about 60% of our attention on public mainnet technology, and we use many of what we build in private permission systems. So we do work in a group called Codify, Commerce and Decentralized Finance, where we issue digital assets, where we do portfolio management around digital assets, where we help build networks. We launch networks and tokens. We do analytics on these systems. We do real-time tracking, risk metrics, and we do payment systems as well. So we're building payment systems for frontier industries like the legal marijuana industry and for other interesting situations. Yep. We do, on the more enterprise professional services side of things, we've built commodity trade finance networks. A project called Comgo is trade finance in the energy industry, major, mostly European banks, but also Citibank, major energy companies. We built phase 1 of that system in 6 months. It's something that normally would take 2 to 3 years in legacy technology, but because these blockchain systems give you so much for free in terms of secure transactional infrastructure, we're able to build business logic into smart contracts and user interface, and we went live in 6 months with phase 1. We're building phase 2 right now. We built an exchange, an equity exchange that's on public mainnet Ethereum that's regulated by the Monetary Authority of Singapore. We built real-time gross settlement systems, again, with the Monetary Authority of Singapore, and one for the South African Reserve Bank.
Right. So last year you were here, you were talking about winter, the crypto winter. Are we over it? Just very short.
So we've had 2 years in our ecosystem where the speculators have had to dial down their activity, have gone into hibernation. But during that period, and I think we're deep in spring right now, during that period we've seen many different technologists, many entrepreneurs come into our ecosystem and build some great technology and really mature the ecosystem quite significantly. We're seeing on the Ethereum platform, and stablecoins are part of this, something called open decentralized finance blooming. So Ethereum and massively decentralized protocols are a new paradigm for trust. They represent a new trust foundation on which we can rebuild many elements of society. On top of that, we're seeing a settlement layer, a digital asset global settlement layer. And on top of that, we're seeing open decentralized finance, where we've got lending protocols, payment protocols, insurance, equities, bonds, etc., being issued by banks and by others, and that's driving just a tremendous amount of activity now. So
new businesses.
It's coming back pretty fast.
Yeah. Now, Professor Huang, when we talk about China, things become delicate. But now I have to ask you this question: what is China doing or planning to do, to the best of your knowledge?
Well, the Chinese central bank, PBOC, has been actively studying and exploring the opportunities of issuing the so-called central bank digital currency since 2014. And my understanding is they have completed the designing of the product, what they call digital currency electronic payment, which basically means it's a relatively modest version of digital currency, looks only at replacing the M0, according to basically cash in a circulation. Yeah. So they designed a two-layer system. The central bank would issue the digital currency to the major banks and maybe some other participants, players like Ant Financial or Tencent and so on. And then these institutions would directly deal with the individuals. Individuals could choose to have the digital currency in their bank account, which means it's not anonymous. You can also choose to use an app on the internet, which basically means like a cash. It could be anonymous for you to use. So,
so you can choose by yourself. It's not.
You can choose which system you want to use. But in general, they could use the banking account or whatever account you use. I mean, because at the end of the day, this is basically a set of codes you have in on your mobile phone, and you can use like a cash whenever you want. So I think now they're into the period of really experimenting in real economic activities. We don't know yet when will be they ready and roll out in the whole country. But that's something I think they already finished. The design already finished, and they're experimenting with it. My two main takeaways. Number one is it does look like at the first look, it's a relatively modest because it's basically replacing the cash. But on the other hand, then you think about if we can all use central bank digital currency for our payment systems, it could actually significantly affect our current fintech space. For instance, what is going to happen to the Alipay and WeChat Pay? Each has like more than 1 billion customers at the moment. Might there be a substitution there? And number two, these companies at the moment are using a lot of digital footprint accumulated around the payment system. And once the central bank digital currency rolls out, we might actually see significant change in the landscape of the fintech space.
So the central bank is actually crowding out these payment systems.
We don't know yet, but certainly there is a clear substitution effect there.
I think you will have objections on.
So is it more is it crowding them out, or maybe being able to exercise a lever of control?
Well, there are the ways that Alipay and WeChat Pay could actually open an account and for these currencies as well. But I think the way you stick to the account becomes slightly different, because at the moment I have to use the Alipay account to pay the money. But once you have the digital currency, if it's just about a set of codes, then you don't have to stick to the fixed amount, the fixed payment account.
Yeah. I think you touched a little bit on what Europe is doing earlier when you answered the first question. Tell us again more on this topic, and of course your take on.
Yeah, because other things as well, as I focus a little bit on Libra, but honestly, especially coming from Germany, Germans are still used to use cash. 70% of transactions in Germany are done by cash. We are the most cautious country with all these digitalized things, and even European Central Bank tells me, a lot of cash is only printed because of Germany. Yeah, we are those who really use cash for almost everything. So being a good German, I have the same behavior, but honestly, even on the European or the Eurozone level, cash is still dominant. And on the other hand, you have a lot of intermediaries for the moment, credit cards, debit cards. So the question is how to overcome these intermediaries, or is there a need to overcome them? I think yes. European Central Bank has developed the so-called instant payment, so which is an on-time transfer from bank account to bank account. That's why, because I asked Christine Lagarde when she came in office as new president of European Central Bank as well, what are you doing about this stablecoin issue? Is there an e-euro showing up? And she said, no, we have instant payment. There's no need. But on the other hand, I know that inside European Central Bank, people are working on how to make a kind of e-euro as a stable coin inside the European Union. But that is not addressing the main issue what we have, and you said it very clearly, the transaction from one currency area to another currency area, which is really costly at the moment. And of course, if their competition starts up and reduces these costs, I think then we are on the right track. But inside a currency zone, even the dollar zone, in the euro zone, I don't see, or the yen zone, I don't see a huge effort coming out of this kind of competition, as the possibilities for arbitrage are limited.
All right.
And even if you look coming back to Libra, I don't see that payment services is the main issue, but the possibility of reducing the arbitrage costs and to have a business case out of that. And if you look back to that, then you really find where the problems are lying. But that brings us to the point you mentioned already, is suddenly another currency, the leading currency, as we had the dollarization in Latin America 30, 40 years ago, where a dollar became the most important currency. And that is something we have to think on, whether it's our interest that Libra or whatever becomes the currency when they start somewhere in the nowhere land, where I don't see that is a good business case, but that's not me to decide. I'm not a shareholder of Facebook. so it's others to decide on that. But honestly, the benefit out of that discussion is that even central banks are thinking what has to be delivered, what has to be done, how can we reduce costs, and even on IMF level, these issues are addressed, and then we are on the right track, because if we want to have more trade cross-border, and I don't speak again between Bavaria and Baden-Württemberg or Germany to Austria, really cross-border around the world, then we have to organize easy payment systems as well globally. And if these Libra discussions gives the incentive that central banks and other institutions like IMF start a process to deliver these kind of services in a proper way, functioning, safe, low cost, then I think we are on the right track. Yeah. Whoever at the end is delivering it.
Yeah. So you mentioned the IMF, because we know we did an interview with the new managing director earlier, and we know that there is a heated debate within the IMF on whether the IMF should change its SDR, special drawing right, and make it a global digital currency. I wonder your views on that, starting from Professor Huang.
Well, I think it certainly would be a good idea if we do want an international digital currency. The problem is IMF is not a global central bank, so I think there will be a lot of issues coming out of it. Who is going to regulate? For instance, are we going to have global monetary policy?
Right.
Yeah, that's very easy to add, as IMF basket is not representing the economy behind those currencies. And therefore, you will always have the question who has to stay at the end of the day, because for IMF debts, the member states of IMF are staying with their taxpayers. On the other hand, the Basel Bank, the Bank of International Exchange, which is the bank of the central banks, has the same problem, not able to deliver these kind of services, as it was not constructed for that. But it is, of course, the technical answer of overcoming this high transaction costs. So that is something Basel can deliver, but it will never deliver a global token or a global stable coin.
Yeah. So I don't really believe the SDR is going to have a heavier role than it has right now, for reasons mentioned. It's a basket that doesn't update very quickly. It's not structurally very agile. There's a project called Finality that is leveraging about 4 years of research on something called the utility settlement coin. So it's a project that will have the characteristic of commercial bank issued price stable currencies or stable coins, but also the security of central bank issued stable coins. So it'll be issued initially in 5 denominations of major currencies. Collateral will be stored at central banks. And this company, Finality, is getting ready to issue these tokens. And it's not clear how they're going to be used. It's going to be more on the wholesale side than the retail side. But one could imagine that these tokens could be used as sort of in a correspondent bank function where you can affect translation between different currencies. And it will have essentially a global liquidity pool. So you'll be able to pull out whichever currency that's interesting. So it's not going to be the IMF, but a system like this might be interesting.
Yeah, just we are running out of time, but I have just one last question for each of you, and you should answer it very shortly. On any financial issues or aspect, we can ask this same question actually. How do you balance freedom / efficiency / innovativeness and safety / security and stability? It's always that question. Starting from you.
Europeans do that by rulings and setting up rules. And I think that is the way we will continue doing so.
Yeah. Joe, please.
So we need regulation. We need safety and security. We need the rule of law. We need taxation. All of that can sit at the nation-state level. But we also need an undergirding new trust infrastructure. Decentralized protocols are the best candidate that I've ever seen to enable trust in automated objective trust rather than subjective trust in contexts where the rule of law doesn't necessarily work, say between nations who are having a trade dispute and still want to be able to conduct transactions and still want to interleave their supply chains.
Yeah.
Well, I just want to say in China, we do have a lot of problems. Invasion in privacy, not protecting data, personal data rights, and so on. But I think it's equally important to point out that because these tech companies are able to utilize these data, delivering financial services, financial inclusion is really happening at unprecedented scale. For instance, you can never imagine one tech company could have more than 1 billion mobile payment users, and any of the online banks are providing more than 10 million SME and individual loans. So I think when we think about data privacy, it's very important. But at the same time, we should recognize that use of data also delivers something useful, and trying to balance between the two, I think it would be the best outcome.
All right. Okay, with that, we conclude this session, and let's have a round of applause for our speakers. And we are on time.